Oh man, so Jerome Powell and Fed central bankers slam crypto, but crypto does not care. Bitcoin rebounding up 5% today, but I've got a huge warning for you guys because we cannot get caught up in this pump. Make sure you watch till the very end. We're going to look at the key levels in the charts. I'm going to cover off what Jerome Powell just said, plus what Christine Lagarde just said. I'm back on the road again, guys, but committed to giving you the updates, even if I have to pull over here on my drive. So, guys, let's get straight to charts. See Bitcoin up 5% today. This was as expected. We called this yesterday, guys. We said that we could get a move to the upside, to the top of our wedge on this symmetrical triangle pattern. Let me just notch this down to the 4-hourly chart. And you can see here, we had this extended move. But what did I say? I said, yes, this is tradable. You can use my links to BitGet or BYBIT in the description. Take your bonuses. You could have played this move exactly as we predicted to the top of the channel. But who has control of this trend? It's the bears. So in terms of your long-term portfolios, we do not want to be having green candle disease right now. We do not want to be chasing this pump. And I'm going to explain to you again later on exactly why central bankers are hating crypto so much. It's very noticeable what they're doing, and you're going to be shocked by what they just said. I'm going to break that down for you in a second. So look at here on the 4-hourly chart. Let's bring out the EMA ribbon here. And what you can see is on the 4-hourly, we're hugely extended. We're facing a little bit of resistance at our 200 EMA ribbon. But more importantly, I want to show you the daily chart. Because on the daily chart, you can see exactly what's happening. We're running into our EMA ribbon. This is normal. This is a relief rally. There's no real rationale for why we're moving up today, apart from the fact that we've just been slammed too far to the downside. And that's what we're seeing here. If you look at the US markets, they have just opened up. You can see the Nasdaq up 2%. This is a big solid bounce back. S&P 1.5 and 1.3 in the Dow after 5 days of losing. So this is just one of those pumps where, look, there's no real reason to. I mean, you can point to a couple of Fed officials who spoke over the last 24 hours. Some of them are a bit apprehensive that the Fed could be raising rates too fast. That could be helping the markets. But more importantly, when we actually look at what's going on and we look at the dollar index, yes, the pound recovered about 1% from what we covered off. If I show you that very quickly, let's take a look at the pound. Not massive recovery here. Let's take a look at the euro. Not a massive recovery here. Let's take a look at the dollar index. Not the massive retracement back down, right? This is nowhere near. I mean, if we switch on over to the 4-hourly, I mentioned yesterday that if this corrects down to the 4-hourly EMA ribbon, that could give us the pump on crypto. But all we're doing is moving sideways here. You're actually creating a continuation pattern here on the dollar index. This is a bull pennant, right? You're like a bull pennant before a bigger move to the upside. So this should get you a little bit worried that we need to hold back right now because the bears control Bitcoin and the bulls are controlling the dollar. Everybody is flowing into the dollar. You can see here that the US 10-year has continued to show really good strength here on the 4-hourly. Yes, it had a couple of red candles there. That's what's allowing the pump, but it's still showing good strength. So all the indicators which we'd want to reverse, such as this bond yield coming down, such as the dollar index coming down, we're not seeing that. Yes, it's moving slightly sideways, but that doesn't justify a 5% move here on Bitcoin. So I'm staying back, not chasing the green candles. If I come on back to the Bitcoin chart, what I do want to show you is what's going on here. And you can see what we can see here is we need to maintain the fact. Let's just head on over to the daily. We need to maintain the fact here, and I'll just pop off this EMA ribbon so you can see it a bit clearer. Here's the high, right? So if we have a lower high anywhere here, we still have a downwards trend. Okay, so we need to respect that. This is not suddenly that we're going to suddenly start rotating to the upside. Now, here's one positive, and I covered this off yesterday. The one big positive we've had over the last kind of 36 hours is that a lot of naysayers of crypto are starting to realize that there's very few places they're getting yield on their money. And this is what's crazy. Whether you look at gold, whether you look at stocks, I mean, we can take a look at gold together. This is gold. Right, let's take a look at gold. Traditionally a defensive stock. When markets are doing bad, people flock to gold. This is down, right? If you look at stock market, hugely down. When you look at crypto, hugely down. But where are people going to get some yield, some hopium, some protection when their fiat currencies, first world fiat currencies like the GBP and euro and yen are getting absolutely slammed? The British pound is down to levels not seen since 1985, guys. We can feel it on the ground here in London. We can feel it. And no doubt it's going to be the same in Europe. Energy crisis coming up, still tensions around Ukraine and Russia continuing to prolong. Inflation continues to be out of control. These are all themes we have to remind ourselves that are in play right now. And things haven't started to improve. That being said, Friday, we get our Michigan sentiment survey. That's going to give us a clue of what inflation levels consumers are expecting. This is really important. The Fed looks at that. And remember, our next Fed meeting is in November. Nothing in October. Early November, I think it's the 2nd of November, we get our next Fed meeting. So he will be looking at that. We also get our PCE inflation. Now, one other thing we get this week, which is really, really important. I want you guys to remember this. I was going to make a video on it when I was at my studio, but I'm going to give it to you now because we can't wait, is our GDP figures. We know we had 2 consecutive quarters of negative growth in GDP. Now, traditionally, as far as everybody's concerned, that's a recession. Jerome Powell along with obviously Biden, started playing games to say, oh, that's not the technical definition of a recession. We're not actually in a recession. The labor market is really strong. Bunch of semantics, and obviously they're playing the political game as well. Now, one thing that has come to my mind, and I do just want to drop it here so we've got it here on the record, is if we have about 4 negative quarters in a row, that's the definition of a depression almost, okay? You start heading into depression territory, let alone a deep recession. So what I'm thinking that what Biden and the Fed could be playing at, given that they've got their midterm elections coming up as well, maybe they're going to eke out and play around with the data to show a positive quarter for Q3. And that way, if we get a negative quarter, 2 negative quarters, followed by a third which is positive, and then they show a negative in Q4, they're going to call that just a double dip recession. So then they can use the political campaign of saying, oh, look, we've avoided a deep recession / depression, and we just had a double dip recession. So definitely keep an eye on that. That's something that's been on my mind, which I wanted to share with you guys, and definitely something on the radar. We've still got Do Kwon on the run. We've got some interesting updates in terms of Jack Mallers' strike, raising 80 million in a Series B, which is great. We know that FTX wins the bid to buy crypto lender Voyager Digital Assets, so let's see what happens in terms of the restructuring. But the main message I want to share today with you guys is these central bankers are coming out strong. They're coming out hard in the paint against crypto. And I just listened to, they were giving a speech, Christine Lagarde, who's obviously the European central banker, and then you've got Jerome Powell representing the US, was speaking in France, okay? They were speaking remotely, but they were speaking in France, and Fed Chairman Jerome Powell was speaking on regulation, and he went hard, right, guys? He was going hard, and basically both of them were just doing a huge sales pitch for CBDCs, and this is going to be the theme we see. We know that they've been slow, and they continue to be slow. I mean, if you just look at this, if you just look at what Jerome Powell is just saying here, Fed says there will be real need for better regulation, reiterates Fed's study of digital dollar will take some time. In other words, they're trying their best to get this stuff out there. They're behind China. China's making good progress with their CBDC. Europe and the Fed and US are behind. But let's not forget what our mission is, guys. We do not want them to try appease us with a CBDC. We've got crypto, which is much better. They didn't want to give us a CBDC when we wanted one. When we wanted convenient payments, when we wanted digital payments, when we wanted cashless, and we wanted transparency, they didn't want to give it to us. But now that they're realizing that crypto is a real big threat to them, they make huge claims. I mean, they even spoke about Do Kwon. They spoke about the need for regulation. They said most crypto assets are hugely speculative, and they're retraced. I mean, look at your stock market. Your stock market's retraced. Look at your fiat currencies. They are dumping. The pound is at lows not seen since 1985. The dollar is only relatively stronger to these currencies. The dollar has no strength in itself too. Hugely inflationary, right? So for them to come out and try to blast crypto, absolutely shameful, and just goes to show what their agenda is. So when these CBDCs come out, push back against them. We've got crypto, which is much better, and we're not going to fall for the fact that you suddenly give us a fiat currency that's just a digital version of that, where you can still print as much as what you want. In fact, which you're going to use as a tool to spy on us, to stop us from making the transactions we want, from making the purchases we want, if we don't conform to what you want from us, right? So let's stay away from this. You can see exactly what they're doing. And what do we expect from a bunch of central bankers, right? They're the ones who put us in this mess. They're the reason why we need to be creating an alternative, and let's stay focused on doing that. Hope you guys enjoyed this update. If you appreciate this type of content, even on the side of the road here, to make sure you guys know what's going on in the market, smash up the likes. Don't forget to subscribe. As always, check out the links in the description to BYBIT or BitGet. Now, really important interview coming up later on. I interviewed Rob from Digital Asset News. Loads of you guys will already know his channel. Big crypto content creator, big investor, and we do a really good hour-long podcast with Rob, and you're going to have a lot of nuggets in there, so make sure you watch out for that later on today. Make sure you share it with those of you, with those people in your crypto networks and on Twitter and the rest of the social media platforms, and let me know in the comments what you think of it. Thanks for watching, guys, and I'll see you in the next one.